Hey, welcome everyone. This is Mike from zozostockwatch.com, and this is going to be your Let's Get Ready for the week ahead for the week of December 17th through December 21st. And I'm going to go ahead and start this video out with some of the headlines that I'm seeing that I found throughout the week and over the weekend and whatnot. We had a lot of Brexit talk last week. Brexit would be hard for Britain. Staying in the EU would be worse. There's a lot of talk about the Italian debt, if that could be the next big financial crisis. Is Italy too big to fail? So this was a good article, kind of encompassing all of that. I'll go ahead and put this link out on my Twitter feed for you after I do the video. What I like to do in the Let's Get Ready for the Week Ahead is actually get ready for the week ahead. Now, we're going to go through a lot of stocks, a lot of information, and then later on, I like to put together stocks that I'll be watching because in my service, we are a day trading service and a swing trade service. So I kind of prepare myself for a lot of different scenarios. Being a day trader and a swing trader, I have to be on top of, the markets and levels and things like that for my swing trade side. And then for my day trading, I have to keep an eye on what stocks are moving, the small ones, or what stocks are showing relative strength. So it kind of encompasses all of that. Another article that came out, and this is a big concern out there for the markets. Major hedge funds are scrambling to prevent financial wipeout. This coming from the New York Post over the weekend. So, the headlines are out there, all right? So you can tell we had a very bad Friday. We'll get more into that in a moment. You're seeing all these headlines come out. Here's one from the New York Times, and believe it or not, this one is from the lifestyle, relationships, and society pages of the Sunday Styles New York Times. Assume crash position. Are you ready for the financial crisis of 2019? The stock market has already had a terrible year, and the doomsayers see plenty of reasons things might get worse. So the articles and the headlines, here they come, right? We have to be ready for all kinds of scenarios here, and hope this video will get you ready for that. All right, so here's a weekly chart. It's in blue of the S&P 500, the SPX. As you can see here, I have my chart lined with the moves here, 10% move, 20% move. Currently, we're down about 11% on the SPX from the highs. We have broken down below that 2600 area, so there's a lot of eyes on that. As you can see, the low here on Friday, we came down to 2583. We had an October low on the October 29th. Show you that on the daily chart now. That low back here on October 29th was the 2603, so we'll call it 2604. So we're currently below that. Now this is the daily chart. In case I'm switching back and forth, black is the daily, and the blue one that you saw before was the weekly chart. Okay, so now we're below those October lows, and the concern is here that we're coming out of this range, right? As you can see, the IWM has been kind of the canary in the coal mine here. It kind of started us off selling off, and now we've broken down through the lows here and headed down down to about that 140, 140.50 area for the IWM. And the SPY also now is breaking down below this bearish flag on the daily chart. So a lot of folks are thinking now if we're going to stay below this 2600 area and the lows from October, that we could come down and, first off, maybe test these April lows, which puts us at we'll call it 255. And then I've been saying that, if we break down hard, we could get down to the February lows. That Friday the 9th, the low was 252.92, so we'll call it 253. Now, your guess is as good as mine, but the first thing that's going to happen is we're going to have to stay below this, that 260 area and the 2600 area on the SPX. All right, so we'll see first if that's going to happen. So, like I said, the IWM has been the canary in the coal mine there, and it has broken the February lows now. So here's the lows back in February on the IWM was at 142.50. So we're at 140.61. So this is what started us off. So now a lot of folks are nervous that this is going to lead us down, lead the way down. Now we are quite oversold, and as you know, in markets anything can happen. A scenario that's going around for Monday is kind of that we get this sell-off at the open, and from a failed breakdown, we get this reversal back up because in the bear markets, you can get, moves back up throughout the course of a bearish or downturn market. So that's a scenario that could happen Monday where that we push down, we sell off hard, and then we get some dip buying or short covering, and that could rally us back up. So that's another scenario that folks are looking for as far as the SPY and the markets for Monday. Now, the thing I've been looking at is the VIX, right? So the VIX right now is currently with a 21 handle on it. So where is the big fear, right? We don't even have a 25 handle, right? We were as high as 25. So you would think with all that selling going on Friday, Dow down, 500 points on the Dow. The S&P was down 51. The NASDAQ was down 160 points. The IWM was breaking that 145 level. U.S. retail numbers came out below expectations. You had a lot of weak data, economic data coming out of China on Thursday night. You don't have the banks participating right now. The transports are not participating right now, and then much of the decline came this Friday in this Friday session for the week. Even economic data from Europe is adding to the investor worries, but yet the VIX remains below 25. As you can see back here in February, we pushed up all the way to 50. Now, we also had hedge fund concerns back in February of 2018, and that's kind of what spiked us up. So if that's what's coming, we could see a huge downturn in the market. Okay, and I showed you that article from the New York Post about the concerns over the hedge funds, and I'll just read this to you from the article here. It said over 11,000 hedge fund funds manage in excess of 3 trillion in assets, and hundreds of funds could be gone by next year, say insiders. So that was something that stuck out to me from that New York Post article. So if that's going to happen, we could see a pop up on the VIX and the volatility. Now, I'm not saying that's going to happen. Nobody knows for sure, but that's one of the main concerns that are out there right now. So enough of that for right now. So how does this play out? So for the swing trade part of me, of my service and for myself and my thinking is that we're keeping swing trades very light right now, very cautious on swing trades. For the month of December right now, we've done we've done seven swing trades. We had one loser and six winners in our swing trades, but that's very light for my service. It's been mostly doing day trading right now. The other day we were playing bounces in FedEx. We played a bounce in Facebook. We've been playing some of the small ones, ADIL. COP, ANY, ALQA, things like that. We did get a trade in Yecco and ConocoPhillips, so it shows you the range that we're trading. We've been trading Neo and Square. Square, we did a bounce play on that one. Neo, we've played UXIN, has been traded in our service as far as day trades. So mostly doing a lot of intraday trading right now. That would be, and if you're not an intraday trader, I understand that people work. So my best advice is to, lighten up a little bit. All right. If you've just gotten into some stuff that you bought and you're down just a little bit, maybe you want to cut it loose until things improve in the market. All right. Or if you have some gains on things, maybe you want to, pare them back a little bit until we get through whatever we need to get through in the markets and things turn back up. All right. So that would be, I'm not a financial advisor. I'm just a trader. So, you're going to have to look at your portfolio for yourself and make those decisions for yourself. All right. Now, as far as the week goes, for the week, we did have the social media index ETF SOCL. That was up 1.77%. TNX was up 1.44% for the week. FXI was actually green for the week, this week that passed. The SMH was also green for the week that passed. We had the dollar gaining strength, so that's not good for the global companies in the United States. That was up this week. And then once again, we had KWEB, which is the China Internet ETF, was up fractionally. To the downside, it was pretty much a big bloodbath out there in the oil sector. You had the services sector, the OIH, down 7%. Here was the VIX. Now, on Friday for the VIX, we were up almost 5%, but for the week, we were down 7% for the week on the VIX. So let's see if that volatility starts pushing higher. We'd like to see that. We want to see some big fear come into the market so we can see if we're near a capitulation bottom or getting close to one. As far as the marijuana cannabis ETF, that was down 6% for the week. The Dow Jones Industrials were down. I'm sorry, the Dow Jones transports were down 4%. So now, once again, there's also a lot of talk of as the transports move down, so will the Dow move down. If you look at the transports themselves, the Dow Jones 20, and I'll go over to my weekly chart. Now we've broken out of this range here, right? This trending range. We're below the trend line here, so a big push down. So that could affect the Dow in the Dow theorists as the transports move down and lead us down. So the Dow might follow also. All right. As far as for the week in JNUG, that was down almost 3%. Oil was down over 2.5% for the week. We had silver SLX, I'm sorry, steel SLX down almost 2% for the week. So SLX was down 2%. That's the steel ETF. The IBB for the week was down 1.65%. So really no place to hide this week. Let's look at some of the sectors for the week. We had this IVZ. We had the IVZ down for the week 8.48%. Very closely watched, but this was down 8.48% for the week. Basically, what it is, Invesco assets. This is assets under management. It dropped, the firm said. The decrease was driven by net long-term outflows. So folks are pulling money out of the market. So we were down on that 8.48%. The XOP, the oil and gas exploration sector, was down 7.77%. And then also the airlines were down. This is the airline sector. That was down almost 5%. So even with oil dropping, airlines are still dropping because of global slowdown fears. The XME was down 3.53%. The banks also down another 3% this week on the banks. We had the XRT, which is the retail ETF, that was down almost 3% for the week. As you can imagine, there was a flight to safety in the utilities, up fractionally, and the XLC, the communication sector, was up fractionally for the week. So let's go ahead and take a look at some things we should have on our radar for next week coming up. This calendar, economic calendar, courtesy of the Trade Exchange. So this is a nice calendar that they produce. I'll put this link out on my Twitter feed also at Zozo Stockwatch. So basically, if you click on where it says companies reporting earnings, you can see a list of the companies reporting earnings for before market and after market. So on Tuesday, the FOMC meeting begins. Now, this is the last time the Fed will meet, and they're supposedly going to be raising rates at this meeting. The actual rate announcement comes on Wednesday at 2 p.m. All right, and then we do get a conference at 2:30 on Wednesday, the 19th. So this is going to be closely watched. This is probably the most important thing that will come out in the week ahead, is if the Fed's going to raise rates, and then the wording that they use during this conference, meaning their markets are looking for the Fed. Are they going to be pausing? Are they going to continue on with the increases? So we'll see how that all plays out. Pretty straightforward as far as economic information after that. You have your oil numbers, your gas numbers coming out. You have the GDP coming out on Friday. So this is going to be the most important day next week, is that 19th, the FOMC. As far as earnings, we do have some earnings coming out next week. First up, we have, make this bigger for you so you can see it. All right, so we have on Monday after the bell, you have Oracle coming out. Now, Red Hat RHT symbol there was purchased by IBM, but their earnings will be coming out after the bell on Monday. Before the bell, we have on Tuesday, we have Darden Restaurants. A big name here, Micron, will be reporting after the close on Tuesday. FedEx will also be reporting on Tuesday after the bell. That could also affect UPS. J-Bill will be reporting on Tuesday after the bell. People watch this to see how the Apple iPhones, and they do a lot of circuitry and things like that, J-Bill. So this will be closely watched. We have General Mills, GIX, Paychex, and then Thursday before the open, you have BlackBerry will be reporting. You have Carnival Cruise Lines. You have Nike coming out Thursday after the bell, and CarMax. KMX is the symbol there, Friday before the open. So that's some of your earnings that will be coming out for the week ahead. So let's go ahead and look at some of the worst and best stocks. We'll start out with the worst stocks for the week. The first one up is Tilray, TLRY. This stock for the week was down 25% as these high flyers, profits are being taken on them, and hedge funds are selling out of them. So TLRY down 25% for the week. We had J&J take a hit on Friday, down almost 9%. J&J shares plunged, close to 10%, following a Reuters report that alleged that the company knew for decades previous baby powder products sometimes tested for small amounts of asbestos. All right. Now, J&J did come out and defend themselves. The Reuters article is one-sided, false, and inflammatory. Simply put, the Reuters story is an absurd conspiracy theory, and that coming out from J&J. But that stock got knocked down for about 9%, 10% this week on J&J. Costco had earnings come out this week. The stock dropped 8% for the week. Urban because the retail numbers came out and they were weak, and also just because of the markets, this stock was down 10% for the week. Winter coat manufacturer down 11% for the week on GOOS. UA Under Armour, they had lowered their guidance down almost 20% on the week. FL, Foot Locker also was affected by that, down 7% for the week. FLR took a hit this week, down 10%. Engineering and construction. So FLR, you can see here on the weekly chart, the stock has been punished down from 60 all the way down to 32, but this week it fell an additional 10%. UNG, Nat Gas, fell 16% this week. Had been very strong, Nat Gas, UNG, but this week it took a hit, down 16%. USO Oil down 3% for the week. The IYT for the week was down another 4%. We spoke about that earlier in the video. Schlumberger, which is a component of the OIH, was down 9% for the week. The OIH itself, the oil services sector, down 7% for the week. RIG took a hit this week. RIG, down 9% for the week. The XOP, the oil exploration sector, down 8% for the week on the XOP. KRE, the regional banks were down 6% for the week. The XLF also dropped about 3% for the week on the XLF. Names like Citigroup dropped almost 6%. Bank America took a hit this week, down 4%. Goldman Sachs continues to move down from that head and shoulders pattern on the weekly chart. We're down another 4% this week on Goldman Sachs. RF, which is a regional bank, fell 10% this week. Zion, another regional bank, dropped 8% for the week. CRON, another pot stock, dropped 11% after they had that positive news with Altria Group. This stock dropped 11% for this week. Mosaic moved down this week, down 8% this week. IDRA moved down this week, down 34%. They had a release of phase 2 data, and it wasn't to the liking of Wall Street, so this stock dropped 34%. ADXS, Amgen terminated the license and collaboration agreement with ADXS, so this stock dropped 37% for the week. FedEx, which has earnings coming up this week, this stock was down 9% for the week, took UPS down with it also. UPS was down 6% for the week. MGNX stock dropped 17% for the week. FDA partial clinical hold on phase 1 trial. So an FDA partial clinical hold on their phase 1 trial for MGNX drove it down 17%. AXON, phase 2 trial did not meet primary endpoints for AXON. Stock dropped 41% for the week. ACOR, downgraded sell at Goldman Sachs. This stock dropped 13% for the week. TOCA, they did an offering, and this stock dropped 29% for the week. MRNS also did an offering. This stock dropped 30% for the week. NBIX, phase 2 did not meet the primary endpoints for NBIX, so this stock dropped 15% for the week. SGYP filed Chapter 11 bankruptcy. Stock dropped 78% for the week. Some of your best stocks for the week, and we'll lead it off with Facebook. Facebook was up 5% for the week on FB. Procter & Gamble got an upgrade this week, was up 5% on that name. AVGO, it helped the semis a lot this week. It was up 11% for the week. The old Broadcom AVGO, that's the symbol for it, was up 11% this week. Twitter had a very nice week. This stock was up 9% 4% for the week. Okta in the software sector was up 7% for the week. CIEN had earnings this week that came out. Stock jumped 11% for the week. We had QD rising 7%, 17% for this week on QD. QTT also was up 18% for the week. So a couple of nice gainers there. Facebook, I forgot to mention that JP Morgan named Facebook to its internet pick for 2019. So that's what pushed that one up 5%. Forgot to mention it when I was showing you that chart. LU was up a little bit of recovery there. Another Canadian company up 5% this week. PayPal moved up this week, was up 4% for the week. Square was up about 2% for the week, along with PayPal. Tesla had a good week. This stock was up 2%, but if you notice on my weekly chart, we are coming up to a big resistance spot here on Tesla, and you can see these topping tails on Tesla up here. So I don't know if it's going to be able to push through. We'll see how that one does for the week ahead on Tesla. Intel had a good week this week. It was up 4%, helping out the semi stocks. NEO, a Chinese electric EV maker, NEO was up 10% this week. NIO symbol there. We also had FTCH was climbing this week 8%. NVAX was also up this week 18% for the week. NBEV had a very good week. This was one that we did a swing trade in at the service. It was up 27% for the week on NBEV, and we got a very nice piece of that on NBEV. CORT, they did an issuance of a patent for related to Cushing's disease. So this stock jumped 24% this week on CORT. ADIL, they did a press release that it will now include patients with opioid use disorders for ADIL. So this stock was up 60% for the week on ADIL. MOGU had a very good week. This stock up 51% on that one. DOMO, also a recent IPO climbing 8% for the week. Another one in the software application sector. Zscaler was up 5% for the week. Data was also up this week. So you can see all these software application companies had a good week. This one was up 4% for the week. DOCU had a good week, up 8% for the week. COUP also climbing. COUP up 7% for the week. Another software infrastructure company, COUP, up 7.35%. MDB also had a good week, up 7% for the week. So ZLab also climbing. This stock jumped 14% for the week. A biotech name, HUYA, a China recent IPO, jumped 25%. For another China name, had a big week, up 60%. MYOS was also up this week, up 38% for the week. ALQA climbed this week 21% on this name, and GRVY had a very good week. They're in electronic gaming and multimedia. This stock jumped 10% for the week. So that's some of your best stocks for the week. So in closing for this video, and I'll bring us back to the S&P 500. So in closing for this video, definitely cautious. Be cautious out there. If you have any recent purchases that you bought long term and you're down just a little bit on them, you might want to cut them out. Your long-term winners, you might want to take some profits off of them. We could just be getting started here. We could get a push down Monday and reverse back up to sell into. Like they say, anything can happen with the markets. We could get a tweet out or some kind of news that could push the markets back up. We don't know. Or we could get this move down to around that 2,300 area for a 20% correction. Or we could move down, 30% down to this 2,000 area for a 30% correction. What I would say is make sure you're comfortable with the stocks that you're in. And don't let any one stock take your capital down too far. All right, adhere to your stops. Be in stocks that you're comfortable with, but set stops in them. All right, don't let any one position blow out your accounts. All right. So this is Mike from zozostockwatch.com. This is your let's get ready for the week ahead. I will be later back at it later on with stocks to watch. All right. So look out for another video for me. There'll be one coming out later, stocks to watch from zozostockwatch.com.